Hey, what's up, amazing traders? Welcome back to my YouTube channel called Traders Advocate. And in today's segment of the YouTube channel, I'll be doing a top-down analysis. I know most of you traders, especially struggling traders, you struggle to do your top-down analysis. I'm sorry I tagged the video on the thumbnails, top-down analysis for dummy. You're not a dummy, you're actually a smart person, but just to get attention, right? So hence this video. So we're teaching you how to do a top-down analysis, taking out all the confusions and giving you clarity and showing you the proper way to actually do a top-down analysis, so you can get a better entry and make an informed trading decision. If that's what you're really interested in, I think you should hit the subscribe button, the bell notification, so you don't miss out on our subsequent video. Sorry you didn't get my name. My name is Bestman Dipre Kelsiamakri. I'm a Forex trader with over 10 years trading experience. And you won't be seeing any fancy thing on my screen, any fancy stuff on my screen. Neither am I showing you any complicated things or complicated strategy or showing you lifestyle. I don't do all those nonsense. I pride myself to be one of the most realistic Forex trader in YouTube on YouTube. So yeah, let's jump right into the video. I don't want to talk too much. All right, so in front of us, I'm going to use the Euro USD chart to break down the market for us, so we can get to know what we are looking for. We get to know how a top-down analysis is done. I'm going to use two charts or three charts, then we'll call it a day. All right, so yeah, so the Euro USD chart is in front of us. Pardon me, I have to take out everything so you guys understand what I'm talking about. So I'm going to clean the chart so we have a naked chart in front of her. So this is the chart and this is the monthly time frame. For me, I'm a swing trader, so I do my analysis from the monthly time frame. If you are intraday trader or a day trader, you might as well want to do your analysis from the daily time frame or the 4 hours time frame down to your entry time frame, which is the 15 minutes. I don't preach day trading or scalping. For me, I feel it's not the best way to trade. I know even now and then most of you want to be in and out of a trade because of how difficult things are in the world right now, or because of your hunger level. Well, for me, who have been trading for over 10 years, I've come to realize that being a swing trader is more healthy and it suits my personality better than being a day trader. And I have more winning trades being a swing trader than being a day trader. Just imagine, let me use this scenario so you get a better picture of what I'm trying to say. Just imagine you're in a class and there is three students in the class. You're in a class and you have three students in the class, and one of the students is a swing trader, the other is a day trader, the last student is a scalper, and there's a textbook that they need to read to pass an exam. The swing trader now reads from the first page of the book, from the front cover. He read every single page down to the last page. So he will have a better overview and in-depth understanding of that textbook, right? Because he read every single page. So the day trader student, he decided to read from the center of the page down to the last page. So you see his view and depth of that textbook will actually be limited because he didn't read from the first page to several other pages. He started from the center of the page down to the last page. It's even worse for the scalper who decided to just read 2 pages down to the last page. He has a very, very, very minute view of the textbook. So who will have a better score when they sit for the exam? You know what I mean. It's obviously the swing trader. So being a swing trader, you get to see the overall market. You get to see what the market in truth is doing, and you have no blind spots. And you're not prone to market manipulation. At least you have few each is here and there where the market actually manipulates you. But you understand what I'm trying to say? You are not that prone to market manipulation compared to what the intraday traders and the scalpers are obviously facing week in and week out. All right, so let's jump out into the video. So this is the naked chart of the Euro USD. So I'm going to mark out my key level. I'm going to explain why I mark out my key levels. All right, so you have to understand in it down. This is a bearish trend. A bearish trend means the market is coming down. So this is a downtrend. All right. So in a downtrend, the market creates lower lows and lower highs. So this is a high. I'm going to mark this out. Although this market is way far from this area, but I'll just mark it out. Okay. and this is a low. Why is this a low? Because this is a high, this is a lower high, this is a high, this is a low, this is a lower high. So why am I marking out this level? Because we can see price have interacted with this area before one time, two times, three times before breaking below it, coming back, have a struggle around this area. So this is a major area. You don't want to mess with this area. This guy is major. You can see our struggles, struggle. We broke below it, also had struggles, or we came here had struggle before actually collapsing all the way to the downside. So this guy is a major guy. So you don't want to mess with this guy. So I'm going to mark that guy as my low. Then also this is the most recent, not the most recent, but this is a low. So you can see which broke down here. We had struggles, we pushed up, we also pushed up. Kimia rejected, we pushed up. So this guy is also another guy that needs to be marked out, right? When we broke below it, we couldn't sustain this move. We came back, we retested, we played around it, played around before actually pushing back to the upside. So this is a low. So in short, we've pretty much marked out the levels for a downtrend, or the major key levels. So this, we have a high, we have a low, we have a lower high, we have a lower low, we have a lower high. This now is the most recent lower low. So I'm going to mark this out. But inside of this level, we also have an immediate level inside of this level. It is not a major level, but it's not a level you want to play with. You can see when we came back here, we rejected, we pushed up, we came back here, we rejected again, we tried again, we rejected. So I'm seeing a level right here. So I'm going to mark this level out. But I'm not going to mark this level with the same color I did with the other levels. I'm going to use a different color. Why? So just telling me this guy, this is not a major level, but this level can cause an upset. This level can be a major factor into where the market will be heading to. So hence the color we will be using. So you can see we struggled out. This is the monthly time frame. So this we have several years. The market has several years trying to break out from here, failed, came back down, broke above it, retested it, pushed up, kissed here a couple of times, kissed it again, came down, broke it, retested it, pushed up, and we are currently having difficulties now sustaining a push above this area. So this level is here. So what am I looking at now? I can see the major time frame being bearish, right? But more so, I can also see an immediate bullish trend trying to occur. So you don't get confused. So if I draw so let me try to explain better. So inside of a bigger trend, we have smaller trends known as pullback, sometimes immediate trends, right? If I go to the lower time frame, this push you see right here, this is a pullback. On the lower time frame, this is a major bullish trend. If you go to the 4 hours time frame, the 1 hour, the 5 minutes, 15 minutes, this is a major bullish trend, all right? But notice that whenever the market pulls, it hits a level, it reverses down. It hits a level, it reverses down. So this is an immediate trend within a major trend. All right, I'm going to explain that properly. So why, and how do I know this is an immediate trend? Because this checks all the characteristics of a downtrend. Sorry, of an uptrend. This is a low, this is a high, this is a higher low. This low is higher than this. And this is a new higher high. This high is also higher than this. But does this mean the trend has changed from the major trend that changed from being bearish to now being bullish? No. Principle of price action states in a downtrend, price should be creating lower lows and lower highs while maintaining the highs. Take that again. In a downtrend, price should be creating lower lows and lower highs while maintaining the highs. So until this high here is broken, whatever is happening here, it's just an immediate trend within a major trend. Because I think again, this is a low, a high, a lower high, a lower low, a lower high, a new lower low. But we now have an immediate trend trying to occur until this price comes and violates this plus lower high. Then we can say a full-scale reversal has taken place. But for now, this is an immediate trend moving against a major trend which is bearish. And if I draw my major time frame trend line, we've broken above the major trend line. So we've broken above the major. This was the major trend line holding this market down. We've broken above, we're pointing to the upside. Now, most of you traders are getting very confused. When price breaks a trend line. It will say change the trend, change the trend. You're wrong. Trend lines are technical tools, not market structure. A break of a trend line means we 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 have an immediate trend moving against a major trend. Change in market structure or change in trend occur at the break of a high or at the break of a low, depending on the trend. In a downtrend, price should be creating lower lows and lower highs while maintaining the highs, not while maintaining the trend line. Get that right. So look how we broke above this trend line somewhere around here. We broke above it. We did have said this is a change of trend. Yes, when we broke above here, high bought because this was an immediate trend. But once price comes into this major area of resistance, immediately I close out all of my trade because while we have the potentiality of reversing all the way to the downside. And look what happened. We came back here. We started reversing all the way to the downside to continue with the major trend, which is bearish. So you have to know all of these things, all right? Now we've broken the major trend line. It looks like we want to push all the way to the upside. It's possible that we can come here, form a base here, and start reversing down again to continue with the major trend, which is also bearish. So I need to explain this so you to understand this. Okay, cool. We don't need trend line again. It is violated. We've broken above it. We're having issues breaching here. So what next? I can see what next is that I can also see we also have this trend line coming here. We also have this trend line coming here. So this is the third touch of the trend line. So we see price has broken above this area. Pardon me, I'm going to put the minor level right here. I'm going to putting a minor level right here. So we've broken above this area. This is a height. Look, notice how immediately we had a bearish engulfing candle. I don't know if you guys can see the color properly, so I'm going to zoom in properly. I love using black, blue and black. Those are my favorite colors, right? Compared to the default color, which is red and green. I just love blue and black. So, but don't get discouraged. Don't get distracted, right? Just go with the color. So the blue is the bullish, the black is the bearish. So notice how we broke above here. Immediately we had a bearish engulfing candle close. So when I see price breach an area, immediately I'm seeing a bearish engulfing candle close. I'll just come and put a minor level here and say to myself, if indeed, in truth, we want to blow all the way to the upside, price should come and break above this previous bearish engulfing candle close. And notice we had an attempt close down below. But again, we didn't break down here. We also failed to break below here. We tried again, we spiked above, closed down below. But we didn't break below here again. So we tried again, we failed. So the market is having issues breaking above this area and also breaking below this area. And this is the third touch of the trend line. Now, principle of price action state the third touch of a trend line does the reversal. I must have to state all the rules of principle of price action because these are the clues and rules we use into taking a trade. So this is the first touch, this is the second touch, this is the third touch. What I'm trying to say is I'm trying to build a case as to why this immediate trend should reverse to continue with the major trend, which is bearish. Okay, so we've come in for a third touch of the trend line. So we are looking for a reversal. Mind you, I've said the third touch of a trend line does the reversal. Just because price comes in for a third touch of a trend line does not necessarily mean you just click sell. You need clues, you need confirmation. So this is the third touch of the trend line. We are anticipating, we are expecting a reversal of this immediate trend to continue with the major trend. And if I zoom in properly, you can actually see the market is giving us a clue as to why this immediate trend wants to reverse to continue with the major trend, which is bearish. This is looking like a head and shoulder pattern. This is a left shoulder, this is the head, this is the right shoulder. Head and shoulder pattern are bearish reversal sharp pattern. They have the probability of reversing a pullback to continue with a major trend. They also have the probability of reversing a major trend from being bullish to now being bearish. Aha, now this now makes sense to you. So this is the reason why I'm anticipating a reversal of this immediate trend to continue with the major trend, which is bearish. Why? Because we've run into a major area of resistance, which is this trend line, and we form an head and shoulder pattern, giving us clue that look, this guy wants to reverse to continue with the major trend. So this area marked with the blue bar is the neckline of the head and shoulder pattern. Now you may not see this clearly. The weekly paints a better picture of this. Now on the weekly time frame, we can actually see the head and shoulder pattern: left shoulder, head, right shoulder. But I can tell, looking at this, these are several blown accounts for most traders. Why? Because especially for lower time frame traders, scalpers, and intraday time frame traders, because they are constantly looking for buy and sell, and the market is just moving sideways. The market is consolidating. Little did they know the market was building a case as to why it wants to reverse to the downside. If you're a struggling trader, you've blown money here, you've traded here, you've blown several accounts here, you failed several profit challenges here. This defeat whatever your brokerage firm taught you, or whatever your tutor or mentor taught you. Yes, because why? The market is not moving the way you were actually taught. The market is up, is down, is up, is down. The market tends to act irrational when the market goes into a range. I'm sorry, I have to state this. Not that I'm celebrating your losses. I'm the guy that will help you identify where you made mistake, and also help you identify how you can actually correct your mistakes. Several trade has been blown around here, but it's one of those things. Hence the purpose of this channel. This channel is built for struggling traders. So if you're a struggling trader, this is the channel you should be. You should be familiarize yourself. You should familiarize yourself with this channel and be a part of the family. I'm not telling you to throw away your strategy. I'm not telling you to abandon your strategy. I'm telling you we will help you fix that strategy and obviously help you become a profitable forex trader. All right, and also take out all of the noise that most YouTubers do, tell you the best one hour strategy. I flip this, I flip that. All of those is rubbish. It is jazz. All right, so let's continue with the class. Several accounts have been blown here, several failed profit challenges. But what am I seeing here? I'm seeing a left shoulder, a head, a right shoulder. This is the neckline of the head and shoulder pattern, telling me, look, this guy is due for a reversal to the downside. Now we know what we are looking for. We are looking for selling position to the downside. The monthly, the weekly has told us sell to the downside. So we are looking for sell. Cool. So the rules of engagement will be, we need the market to break below the neckline. Once we break below the neckline, we don't sell at the breakout of the neckline. Take that again. We don't sell at the breakout of the neckline. Don't sell at the breakout of the neckline or the shoulder line. Never. Wait for price to break out of the neckline, then pull back into the neckline. Once we break below here, automatically this becomes resistance, and we're pulling back to do a test of the resistance. Okay, I'm sure you know what support and resistance is. If you don't know, please drop it in the comment section. I'm actually make a video on what support and resistance is, but I believe you know what support and resistance is. So once we break our way for a pullback here, again, don't sell at resistance, neither buy at support. Why? Because you can click the sell button here once price comes in here, and then price can pull a little bit to the upside to hit your stop loss before actually heading to your direction. Trust me, I've been doing this, so I've seen various market manipulation in the cycle. All right, so it's possible. So what are we looking for is, once price comes into this area, the rules of engagement will be, once we come into this, let's assume in this area, the neckline, once we come in here, I'll be going to the 4 hours time frame to refine my entry, because obviously once we come into here, I'll be waiting for a bounce, either a daily bearish candlestick bounce from here or a 4 hours bearish candlestick bounce. Then I will draw my counter trend line across. Okay, so let's assume where will I use to explain this? Okay, I will draw my counter trend line across. Let's see if the daily will paint it. Okay, cool. I will draw my counter trend line something like this. Pardon me, let me use the previous part action to explain my thought process. So I'll draw my counter trend line across like this, connecting the highs and the lows from the 4 hours time frame. The 4 hours time frame, not the 5 minutes, not the 30 minutes, not the 15 minutes, the 4 hours time frame, connecting the highs and lows, and anticipating price to break below. When price breaks below it, I'll start looking for sell. Obviously not this one I'm using to illustrate, this one that's going to happen somewhere around here. I'm just using this guys to explain my entry strategy. Why am I doing this? So I'm not prone to market manipulation. So once we break out here, we pull back here for a retest. I'll be waiting for a daily candlestick bounce. Once I see daily candlestick bounce, i.e. bearish engulfing candlestick, shooting star, inverter hammer, you name them, right? Tweezer top, you name them, right? I will go to the 4 hours time frame to refine my entry. We don't trade on the daily, the weekly, or the monthly. These candles are too massive, and our stop loss area is going to be very wide, and we'll be over risking on our account. I use the 4 hours. Why so? The 4 hours gives me a more better concrete decision than the 1 minute, the 5 minutes, the 15 minutes time frame. Right? So those time frames are used by scalpers and intraday traders to gamble. Information on those time frames are not that concrete for me to start making decisions. So trust me, if you start taking your trades on the 4 hours, your winning trade will be far higher than your losing trade. So once we break out here, we'll pull back here, I'll draw my counter trend. At the break of my counter trend, I will start selling all the way to the downside. So we have all these pips from year to work. This is almost 1,000 pips down here. So I just click the sub button one time, close my laptop, go and do other things with my life, spend time with my beautiful mom, my brother, my girlfriend, read some book, go and do other stuff with my life, not constantly sitting in front of the system, babysitting my trade. No, this is why most of you done your analysis, you place a trade, you sit in front of your laptop, you start interpreting random candles at individual levels, I mean random candles at a random level, and you close the trade to hello, it's coming against, it looks like it wants to come and violate my entry position. Immediately you close the trade. No, 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 that's not how to trade. Once everything clicks and my criteria for entry is being displayed, I'm clicking the sell button. I'll close my system, go and do other things in my life. I'll be coming out to check the trade every two or three days, not every 1 minute, 2 minutes. No. So obviously, once we start coming down, we'll have an area where the market may want to have a consign. This area can actually be an area of concern for me. So I'm going to use this area as my first profit target. So I will use a green. Green means profit for me. Why is this area going to be an area of concern? If I zoom in properly, you'll notice we've had interactions with this area in the past before. Don't play with this guy. Price can come here, bounce here, start pushing all the way to the upside. And the worst feeling you can actually be experienced as a trader is to be in a lot of profits only for price to come into an area of concern because you ignore it or you didn't pay attention to it. Price start reversing back to the upside. Worst scenario even come to threaten your entry position and affect your stop loss. The average trader will then become very revengeful once you were in a profit before, when you are in a floating profit and price comes into an area reverses, the stop loss gets smashed. They become very revengeful. They want their money back. And what tends to happen is they began to revenge trade. They start looking for. I sold before. I was in a lot of profit. They'll keep looking for selling position again because they sold before. They're in a lot of profit. They feel the market will eventually reverse to keep going down. So they're looking for more entry position to sell. Not in the market has come to an area and starts reverses. So one losing trade now opens a portal of series of losing trade. So when you do your analysis, always look out for areas of concern that can cause an upset as to why your trade, your floating profits will not marry your overall target. This is my overall target for this guy. This level right here, at least for now. But this guy is here. This level is here. I can't ignore this level because we had interactions. Look, guys, the market tried. If not this level, I think it's this level. I'm being honest with you guys, but I like to use the candle close of the recent high, so I'm going to use this level. But in truth, it's this level for several years. Notice from 2022 down to 2024, if not 5. The market was 2025. The market broke out of here. The market was having issues breaking above this area. So on our way coming down here, we will visit this guy. This guy, we will visit it, and this area has the probability of causing an upside. I don't know whether it will happen, when it will happen, how it will happen. But what I know is when price comes in here, I will lock out my first position. Okay? I will lock out my first position. I will then push my stop loss past where I sold from in anticipation that my second position will get to my overall target, which is here. I'm not going to close all of my trade entirely as profit at this level. No, the monthly and weekly has told me, look, our target is here. So let me explain. So if you have an $100 account, and what is an $100? Look, okay, it's too small. If you have a $100 account, use 0.01, 0.01. All right. Once price comes in here, close out your first position, your first 0.01 entirely as profit. Then on your second position, which is the other 0.01, push your stop loss below where you sold from. So your first trade, you've taken something from the market as profit. It's now in your bank or your portal, right? On your second trade, you've taken a little bit of profit. In anticipation, your second trade will get to your overall target, which is here. Now you get the picture, right? So if you trade $1,000 account, you can use 0.05, 0.05. First first position at the first target, which is here. Push the push stop loss past the break even anticipation by your second position we get to your overall target. And also we have this trend line coming from here. So this guy can also cause a consign. So once price comes here, this will be one of the reasons why I'll be locking in. Yeah, I'll be closing out my position entirely as profit. Then allow the market to decide what it wants to do. All right, so that's it for today. As it for the Euro USD, we've pretty much done the analysis of what we are anticipating the price to do. So this is the top-down analysis for the Euros. If you're having any difficulty, please drop it on the comment section. I will answer your question on the comment section if you're having any difficulty. I'm not going to go to the lower time frame and start looking for trade. I'm going to stick to what the market has told me from the higher time frame. I need price to take out this level so I can sell. Now, I'm favoring this market to the downside to the tune of 60% to the downside. The probability of selling is 60%, and the probability of the Euro USD actually going to the upside, actually continuing to the upside is 40%. I'm going to state why. As traders, we look out for probabilities, right? We don't trade because we want to trade. The only time I will consider taking a buy is if price come back here and break above here. If I see a daily or monthly candle break above here, that would mean this immediate chain will keep pushing all the way to the upside. That will be the only time I'll be interested in going long. If I see price break above here, that means the whole sell setup has been violated, and we'll have a push to the upside. If we break above here, they will have a push to the upside. When you do your analysis, always look out for what might actually not play out in your analysis. All right, head and shoulder pattern, regardless of the time frame they occur, they can be invalidated. Nothing in the forex market is an exact science. The market is moved by social political factors, right? So the market can give you every reason as to why it wants to sell. Something might just go wrong, the market changes its mind and start pushing all the way to the upside. But the good thing is the market will always give you clue. Okay, so if we break above here, a proper monthly or a weekly break above here, bullish engulfing candle, but not a 5 minute break above here, a proper monthly or weekly daily break above here, I will come out here, reanalyze the market. We can start looking for buying position to the upside, but I feel this guy may actually experience a decline to the downside. Yeah, so let's put that one and see, is it time to start selling? No, because price can form a base and start pushing all the way to the upside. So it's not time to start selling. So what are we looking out next for? Let's look at ADSD. Can we use ADSD for this? Yeah, I'm going to use ADSD to do the next analysis. Yes, pardon me, I'm going to take off the chart. We'll close at ADSD. I'll be dropping 2 videos this week. I will also be dropping the weekly analysis for the upcoming week, and also on this channel. Watch that out. That will also help you into you seeing the mindset of a profitable forex trader. That will also be a good episode for you struggling trade. Like I said earlier on, this is the channel for you. So you know what to do. Hit the subscribe button, the bell notification, so you don't miss out on our subsequent video. I have no reasons to come. As you can see, this is my live account. I also manage accounts for other persons as well. So there's no, if I take a trade, best believe I'm taking that trade and when I make profit, you make profit. I don't have. I'm not. I'm not here to sell you a false dream. Okay, no complicated strategy, no hypothetical stuff, no this and that, no flashy stuff. It's just me and my screen, and then analyze the market for you guys. So in front of us, we have the AED USD. So I'm going to do the same thing I did on the Euro USD, which is doing a top-down analysis. So I'm going to get my colors right. All right, so first of all, I'm going to identify the high. This is the high. Don't worry, guys. I'm going to explain why I'm marking all this level. So don't worry, I'm going to explain. Um, don't worry, I'm going to explain all of this. Don't worry, it's not that difficult, guys. It's not that difficult. I'm going to explain all of this, guys. Sometimes you need to zoom out so you can actually see the level properly. So this is a level right here. But I can also don't keep account of this other level too. So if I take the week of this one, this makes sense. All right, so Euro, Euro USD is bearish. All right, you can see I have pretty much drawn on the level. This is the high, this is a low, a lower high, a lower low, a lower high. This was the last lower high. The market has failed to create a new lower low. All right, see, it came back to this lower high, it rejected and started pushing all the way to the upside. Why and how did I know all of this level? So this was a recent high. On our way coming down, we had struggles here, we had struggles here, we had struggles here, we broke below it, retested, we came back down. Look left, I saw this recent one. So this was the recent low, just mark it out. And what happened, price rejected around this level, came back, rejected. On its way coming back, the previous lower high was tested, came back down, broke above, retested it, pushed up, nearly missed a retest of this guy, came back here. So in general, the market just see how the market is just testing the levels. So this level works. All right, so what's next for this guy is we've pretty much broken above the resistance area. This was the resistance, we've broken above it, but we are having issues sustaining this push to the upside. I told you guys before, when I see price breach an area like this and immediately I see a bearish engulfing candle, the first thing that comes to my mind is two things. All right, first, this bearish engulfing candle may signify profit taken by investors because it was the moves actually started from here all the way to this recent resistance. So hence, it is no brainer. Investors will close position as profit here. So hence this bearish engulfing candle. So at this point, this bearish engulfing candle, let me zoom in properly, didn't really signify rejection at this time. Rather, it signified profit taking. Hence, immediately you see this bullish engulfing candle. So what I would do is I will come and put a resistance bar, a minor level around the previous high, the previous candle, not high, and say to myself, if indeed this market want to keep pushing to the upside, come and break above the previous candle. And you can actually see last month candle closed bearish. At the same point, this one closed. The 2 months candle closed. The previous month closed bearish, where this one closed, and last month candle also closed bearish. And this one is looking like we are having issues. We are looking like it wants to come all the way to on the downside. So these are the things, these are the circuit breakers that I put in place that help me not to jump into a trade prematurely. You can see 2 months market is struggling to break above this previous candle. This one tried, failed, this one tried, failed, this one is currently struggling. And today being 14th of June, this one is currently struggling. But in the scenario we break above here, the market is heading all the way down here. But we have this intermediate level the market has to first visit. This one is here. How do I know this one is here? Let's look. You will see these candles coming down here. This guy is very obvious. You can see it right here. So I'm going to use the blue bar, my profit bar on this one. Pardon me. Cool. But in truth, this market looks like it's tired. It wants to reverse all the way to the downside. So now we know what we are looking for. We know the market is having struggles breaching this area. So this can also be seen as a fake out. So this is a breakout, a fake out. The bulls has lost its buying pressure to take this guy all the way to the upside. It looks like the market wants to reverse all the way to the downside. Now on the weekly, the weekly has pretty much told me all I need to know. Maybe we might actually experience a decline to the downside. Now the daily is where I will come to interpret the happenings around this zone. On the daily, I can see the market is building a case as to why it wants to reverse all the way to the downside. Like I said earlier on, the monthly has told me the bulls has lost its buying pressure. So from what I can see is from what I can see here is the market is building a reason, a case as to why it wants to reverse to the downside. This is looking like a left shoulder. This is looking like a head. Maybe we might actually come here, play around here a little bit, to form a right shoulder. So you have to understand the market doesn't just come to a level and reverses like that. It will give you clue either with a reverse or sharp pattern, i.e., head and shoulder pattern, double top, inverse head and shoulder pattern, um, double bottom, triple top, triple bottom. It will always give you clue as to why it wants to reverse. It doesn't just come to a level and reverses all the way to the downside or to the upside. It will always leave clue, and it is giving me a clue that look, the bulls has lost its buying pressure. We might actually experience a decline to the downside. This is looking like a left shoulder. This is looking like a head. Maybe we might actually come in, just maybe form a right shoulder before actually collapsing all the way to the downside. All the dollar-based pair are giving the reverse or sharp pattern. So this is the neckline for the head and shoulder pattern that wants to occur. And if I zoom in properly, even the head of the head and shoulder pattern that is trying to occur has also formed another head and shoulder pattern. So this is the head, Abby. This is the bigger head of the head and shoulder pattern that is trying to occur. It has also formed another head and shoulder pattern. This is the left shoulder, head, right shoulder. You will see it properly on the daily time frame. So this is it on the daily time frame. Left shoulder, head, right shoulder, and we're pretty much broken below the neckline of this guy. So you see, I know what I'm talking about. So left shoulder, head, right shoulder, we pretty much violated. Pardon me, let me get this to my intermediate level color. Guys, tell me on the comment section what you feel about my color. Did you like them? I use this color so that I know what I'm looking at for when I'm trying to take my entry. So we have the head of the head and shoulder pattern also forming another head and shoulder pattern. So this is the bigger head and shoulder pattern. This was the left shoulder. This is the head. We are anticipating the right shoulder to actually occur somewhere around here. But more so, the head of the head and shoulder pattern also form another head and shoulder pattern on the daily time frame. So left shoulder, head, right shoulder. So the monthly, the weekly, and the daily has given us a clear mental picture to look. Start looking for selling position to the downside. So most of you, I notice you do your analysis, your monthly and your daily time frame are not corresponding. The two time are not moving. They are moving at the opposite direction. You have to understand that I said it earlier on when I was doing the Euro USD chart that when you do your analysis on the monthly time frame, you get to see the bigger trend, right? But inside of that bigger trend, we have smaller trends known as pullback or intermediate trend, especially if those pullbacks or intermediate trends are coming from the higher time frame. If it's 2-3 candles moving against the major time frame, on the 4 hours time frame, the daily, the 1 hour time frame, that can actually be a major trend. You get that can actually be a major trend on the lower time frame. So how do we know when an immediate trend wants to reverse to continue with the major trend? It will always run into key areas of the major trend. If it hasn't gotten to a key area of the major trend, it will keep moving until it gets to a key area of the major time frame or the major trend. What are those key areas? Support and resistance, trend line, Fibonacci. And it will review a reversal sharp pattern. Tell you, look, I want to reverse to now continue with the major time frame, which is this and which is down. In this case, the major time frame is bearish. We've seen it, so this is looking like it. The major time frame is bearish. These 2-3 candles you see here, this was just an immediate trend moving against a major trend which is bearish. So it has run into this area and we are having issues sustaining the push to the upside. It looks like it wants to now reverse to the downside. So cool. So this is the left shoulder, head, right shoulder. So what would be the rules of engagement? If you are an intraday trader, you can wait for price to pull back here for a retest of here. Go to the 4 hours time frame, draw your counter trend line, you break off your counter trend line and start selling all the way down here. But me being a conservative trader, I will wait for the right shoulder to actually occur before I start selling. So the left shoulder, this is the head, this is the right shoulder. Intraday time frame traders can just wait for me a pull back into this level. If I have to pull back into this level, wait for you bounce, then draw your wait for you bounce. Once you bounce off of this level, wait for price, draw your counter trend line, the break of your counter trend, you can start selling all the way to the downside. And this will be a very sweet trade for you, especially if you're an intraday trader. But for me, being a more conservative trade, I'm waiting for the right shoulder to occur. Once the right shoulder occur, this is the neckline. Once you break the neckline, I'll be looking for sell. Obviously, on the 4 hours time frame. Let's see any reason as to why we might actually experience difficulty. We have this trend line here, so it is possible price can actually come in here, bounce here, and keep pushing all the way to the upside. When you do analysis, don't keep a blind eye and say, okay, our price must go the way I planned it. It must go the way I know. Always look out for that evil spirit that can cause an upset as to why your trade will not play out. This area, which is also in confluence with this support area. So we have trend line coming from the bottom, and it's confluence with this support area. Price can come in here and bounce. Especially if you see a bullish engulfing candle bounce here and keep pushing all the way to the upside. It is possible. It is possible, right? So the rules of engagement, like I said earlier on, will be me waiting for a proper break below here, right? Pull back into here, a retest, then I can start selling all the way to the downside. So that will be my rules of engagement, all right? Because you can come here, form a base, hit this trend line, keep pushing all the way to the upside. And if that should happen, if that should happen, if I see price coming here, I will bounce and keep pushing to the upside. The only time I will click the buy button is if price comes back here and break above here, because I need price to break above here. Then I'll be interested in clicking the buy button. If that does not happen, I'm not interested, because you can bounce here, price can push a little bit to the upside and go down, right? So if I see a bounce somewhere around this level, let me mark this level hard so I like that I'm looking for that we have. So this is an area of concern for me. So if price comes in here, coming to this level, we can bounce here, but the only time I'll be interested in clicking the sell button, the buy button, is if we break out from here. Then I'll be interested in clicking the buy button. It means the whole sell setup has been violated, and I'll be now interested in clicking the buy button. Obviously, a weekly candle break above here, or a monthly or a daily candle break above here, I will consider taking a buy to the upside. But for now, this market is looking like it is tired. The bulls has lost its buying power. This guy might actually reverse all the way to the downside. So I'll be waiting for a break below. Once you break below here, it means this immediate trend has been violated. This immediate trend has been moving against the major trend has been violated, and we can start rolling to the downside. We can start. Oh, this is horrible. This is what you get. Oh shit. I have to check that. Okay, I have to check that out again on the monthly to see. Okay, correct. Okay, it's cool. All right, so the rules of engagement will be I have to see price, align itself to what I'm looking at. So before I will now be interested in clicking the sell button. So the rules of engagement um, for ADSD is price needs to come here. We need to break above this area or form the right shoulder. Once we form the right shoulder and we break above this area, I'll be waiting for a retest of here before I start selling all the way to the downside. The only time I'll be interested in going long is if price break above here. That's when I'll be interested in actually going long. All right, so that's it for today's segment. I hope this video has opened your eyes to how to actually do a top-down analysis. If you have any question, please drop it at the comment section. Trust me, I will answer your question at the comment section. Or you never can tell, your question can actually be an inspiration into my next video. And I also pride myself to be one of the most realistic Forex trader. As you can see, we didn't have any fancy stuff on my screen, no hypothetical stuff, no this and that, no best one hour strategy, no this, no that. We just went straight to the market and we analyzed the market. And also, I will also be dropping a video that will be premiering on Monday. Two videos will be premiering on Monday. This one and also the weekly analysis will also be premiering on Monday. There's a trade opportunity available on the S&P 500 on, and I think on also the BTC and other major currency pairs. Best believe I have to state that the top-down analysis work across various board, if not every other board. You can use it to trade BTC, crypto, S&P 500, and other major currency pair. Once again, my name is Bestman Depoe Kelsey Amakwe. It was a privilege to be sat here with you guys. I will catch you guys in my subsequent video. Peace and love.